Woke. Joe, good morning. It's great to have you here.
Good morning, Becky. How are you?
Good. Your numbers came in better than expected, both on the bottom and the top line. What happened that the street wasn't anticipating?
Yeah, so Becky, the teams just across the globe did a great job in terms of given the backdrop of macroeconomic pressures to accelerate growth across all three of our segments from what the growth rates were in the second quarter. We saw 9% growth in pharmaceuticals, a lot of growth outside the U.S., MedTech with procedure recovery growing at 8%, and consumer health growing close to 5%. So as supply chain issues abated there, we were able to have more products on the shelf, take strategic price increases, and saw a recovery in that business. We're excited, certainly, how that plays out for the rest of the year. We obviously maintained guidance largely when what we printed this morning, but we're really excited about what that presents probably for 2023 and beyond. You look at our pipeline of pharmaceutical products, 100 candidates in development, 43 in phase 3, 10 in registration. The cadence of medtech innovation continues to be extremely strong with 20 new entries this year alone, and great free cash flow. So we've already distributed to shareholders over $11 billion in the forms of dividends and share repurchases, and it's when we're still very much poised to add to our portfolio with strategic acquisitions.
Hey, Joe, I hear everything you're saying, and none of it seems to reflect the concerns that the market's had recently, whether that be a slowdown is coming from an economic perspective, whether inflation is going to continue and eat into profits. That doesn't affect you on any way, shape, or form. How are you guys managing around that? Yeah,
so again, that's why we're excited by what the teams were able to accomplish. Obviously, the macroeconomic pressures, as folks read the print this morning, you will see gross profit has eroded by about 170 basis points from the third quarter of last year. But we've been able to manage other parts of our P&L to still prioritize investment, up 8% over last year's record levels. Again, strengthening the future. We are facing into a stronger dollar, so reported results obviously are somewhat of a headwind, about $4.5 billion on the top line for the year and about 68 cents on the bottom line. But again, our teams are being very effective managing the deployment of all of our resources to make sure that we're focused on those initiatives, those projects that really drive value for patients and consumers.
You mentioned that you put some price increases in. There was no pushback. That's something that consumers are willing to pay at this point?
Yeah, at this point, as you saw from a number of our consumer health competitors, we've been able to institute some strategic price increases. Our products, such as Aveeno, Neutrogena, Tylenol, they're well respected. They're loved by the consumers who use them. Price increases obviously are not an option for us in the space of pharmaceuticals and very, very limited in med tech. But in consumer health, we found that the elasticity is still there, so the demand is still very, very strong.
With the Inflation Reduction Act passing, and that's going to allow Medicare to go ahead and negotiate with drug companies, what kind of pressures does that put on your company for next year?
We're still looking at the details, and actually the administration, as well as CMS, is still looking as to how that's going to roll out. That's a few years away. 2026, I believe, is the first year that that's instituted. We do have concerns with respect to how that could burden investment in innovation. It'll obviously I think hurt life sciences in general. Some of the great innovations we have in oncology, in mobility for people with, needing knee and hip replacements, those types of things could potentially suffer if it's not done appropriately. So we are awaiting some further guidance as to how that will play out. But we do have some strong concerns in terms of how it may hamper innovation going forward.
So the year, Joe, it's Joe Kernan, the year outlook, you didn't really raise, you just narrowed, I guess, right? The stock is reacting positively. I'm wondering whether, I'm not really sure why. You're a little bit above it, but you're not really raising guidance. But unlike a lot of companies, and especially multinationals, you're going to earn more this year than last year. And not too many banks can say that. There's a lot of companies that aren't going to be able to say that. So
thanks for bringing that up, Joe. Well, I think on the bottom line, if you look at it, we digest it, if you will, the stronger U.S. dollar with a little bit better operational performance. And we leaned in very much in January. You may recall, I think the street was surprised to the upside. And we're living into that expectation despite a much more challenging year than I think anybody thought back in January.